Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about the news, current events in business, finance, accounting, or none of those things, just what comes to our heads from the perspective of accountants. In fact, 3 accountants. I'm Ty Carr, and with me today is Tammy Hess.
Hi.
And Charlie Ziegman.
Hi.
What we're going to be talking about today, well, what should clients pay for accounting and CFO services? Should they pay for time or objectives? And then Trump cemetery business move. What's up with that? I'm going to talk about craft spirits, budgeting for your finance department, and how you look at that based on your size. Then we're going to look at BMW looking for subscriptions to get heated seats. And finally, high school CPAs. Can we build an elite core of accounting Jedi? All right, let's do this.
All right, so I've got an article we can talk about today from Accounting Today called Rethinking the Finances of Accounting. And so what the article is basically about selling fractional CFO services to small businesses and kind of what some of the different ways or what some of the different thought processes have been in the past about how to price a service like that. And so what the point that the article makes is that for a long time, the billable hour has basically been a critical piece of the accounting because it's a clean way to monitor work, project bandwidth, calculate revenue, and it's kind of been ingrained into the industry in a lot of ways. But there's been a lot of different kind of people trying different models in that field. And one of the models is that they've basically tried selling the services with respect to the outcomes as opposed to the hours that it takes to do them. And so what they're looking at is they will sell like various, they'll value bill the outcomes to the clients, and then they will set it up so that the total cost to the business is built around what that business can afford. And so by doing that, they're able to, put themselves into a lot of different businesses that they might not otherwise have a chance to even operate with, because those businesses would otherwise be looking to hire probably a full-time, more traditional W-2 employee. And so I think that's kind of been, this trend that has really changed the fractional work style of the controller or CFO position. And so, the article just talks about the different approaches, whether or not value-based billing is more adequate or more appropriate, or whether or not the hourly billing approach is more appropriate. And so I know that obviously as a firm, we have a lot of opinions on this topic. So I just want to kind of open it up for discussion and see if you guys have any thoughts about when is more appropriate to sell each style of pricing.
Yeah, I think from a firm perspective, the way I look at it and the way we do it from a TCA standpoint is if we're in the advisor's seat where a client is actually seeking advisory for us, they want us on the team to lend our brains, our thoughts on a continual basis to the objectives of their business, then that's a good candidate for value pricing. And it's a good candidate because I think from their standpoint, it's like one of the roadblocks for using professionals like us in your team is the idea that you're getting billed for every minute that you talk to them. So I think it's a good value. Value pricing is a good value for the client in the sense that it overcomes that friction and that they have a price, they're paying it, and they know now they can pick up the phone and call you whenever they need to. And it's not a they're paying for the minute and they have to stop and think, do I really need to incur this cost before I work with my advisor or before I work with my team member, which makes it much more like working with a CFO that is your CFO in-house. And that's usually our goal when we do what we call a CFO advisory service. From our standpoint, on the firm standpoint, it also works well in that context because we have a lot of control and influence over the scope of the work that's being done. Like we have a lot of ability to define what needs to be done, come up with a reasonable price for that work, and the client is really focused on some key outcomes and not on it's those key objectives, when it's the key objectives that we mutually agree that's what we're trying to achieve, and we're able to achieve those things, and the client feels value because we achieve those key objectives, like the books are closed and the bills are being paid and analysis is being done. There is some visibility to what the future cash flow of the business will be. Those are some key objectives that we can check those boxes and the client feels value, and we're good to go. But in scenarios where for a variety of reasons, it could be because the client maybe maybe they have a finance background, maybe they have finance people already in the organization, or maybe it's because they're trying to parse the work so they can make it as affordable or cheap as they can. They want to control, they have desire to control the workflow. And so in those, in that situation, it's not just about did the books get closed or do we have visibility of future cash flow? It is, did every kind of report that was defined by the client get made? Did every step of the closing process that the client wants to go through, whether we think it may be necessary or not, did each of those steps get done? And I think when that's the nature of the work, it's more what I would call delivery or execution work than advisory, because they're not relying on our advice about what needs to be done. They've already decided what needs to be done, and they're just relying on us as highly skilled labor. And we do that work, and I think it is valuable to some clients. Again, they may have a substantial amount of financial expertise in-house, either in an owner or in an executive that's already there. And so, they can brainstorm with us, and they can legit have their own kind of perspective on what the steps are to do this. They just don't have the bandwidth to do it all themselves. And so if we're being hired to essentially execute a set of steps at the direction of a client, then I don't think value pricing works, because because it's not the end object. There's not a clear, like, here's the overall objective. The value is being felt by the client because you kind of do what they want at their direction, which could be more or less hours on any particular day. And so in those settings, I think it is better for us. And I find it's usually amenable to the client as well, that they just pay by the hour. If what they actually are, if they're not wanting advice, if what they're wanting is highly skilled labor, then they may as well just pay by the hour. And so we do both. We provide highly skilled labor under the direction of clients who pay us by the hour. And we do advisory services where we are on the team and helping set the direction, where they pay a value fee. And that's how I see it, and kind of how we organize it within our organization.
Yeah, I don't have much to add on that point, because it's very much aligned with kind of how we do run the firm. The only thing I would say to the article and kind of to the discussion is that really setting that decision up, whether it's going to be value-based billings or the hourly transactional, or kind of worker bee type of situation, needs to be clearly addressed up front and communicated and understood. Because I think that could be where some people could get whipsawed, is if you're doing value-based work, but yet, like to what Ty said, that if the scope or stuff changes and we're no longer on the advisory seat or the directional seat, then it could swift into something different, where you're like, oh, well, if you actually look at how much work I'm doing and the type of work or the output of the work, it really isn't advisory. It actually is more on the other type of transaction, that you don't want to be surprised or have to kind of renegotiate and kind of think about it. So it's really good to discuss that and to understand what it is that any firm is deciding to work with and offering, and what they're establishing, and for the client to understand that too, and to be kind of crystal clear on that.
Yeah, and I think another along those lines, I'll just throw in another distinction that came to mind while Tammy was filling in some of those excellent points on that, is that I think sometimes value-based fees, because they're presented as fixed fees, it gets confused with simple fixed fee billing. And the analogy is that when you're doing a value-based fee that is here's a fee that is based on the objective that we're going to achieve, not the hours we're going to spend. That's what I call a value-based fee, but that's still not the same thing as like an all-you-can-eat buffet of hours. And I think that's sometimes the misconception of certain clients, that they actually don't want to agree on an objective. They just want to get the service provider to, they like the idea of a fixed fee with a service provider because they have in their mind all these projects and all these different things they want to explore that could take all these hours, endless and endless hours. And it's like, oh, you mean I can pay one fee and then I can just work people for, any number of hours at my direction, send them off on a wild goose chase here or an analysis there, or, and that's not what this is. I think that's the important distinction there. Is this is not you pay one fee and then you get an all you can eat buffet of as many hours as you want to explore whatever you want. This is not to explore whatever you want. We've agreed on an objective that we've also agreed that we as professionals are in the best position to advise on how you achieve that objective. And, this relationship only works if the client is going to be happy because the objective was achieved, that their happiness is not dependent on, their satisfaction is not dependent on seeing us work a certain number of hours or getting a certain number of extra kind of side projects from us, that where they feel the value is that the objective that they were looking for was completed, and we've agreed on what that objective is. And I think that sometimes is not, that part is the real art of the discussion with a client, because clients aren't used to being asked to agree to objectives. They come from a world of where they're just billing for hours, and then when you start down this road of value-based fixed fees, they interpret it as, oh, you mean I don't have to pay for every hour, but they still think that the scope of what they're asking you for is just a bunch of hours that they want to direct to have you do whatever they want you to do, kind of thing, right? And so you really have to reorient the discussion about, this is not about you paying me to spend a certain amount of time to just do whatever comes to your mind that week. It's about you having an objective that we are going to fulfill, and that's what the fee for that objective is.
I think that makes a lot of sense. And I just want to add and say that, when you come at it from the hourly perspective, it allows you to be a lot more flexible in kind of what you take on, as long as those things are all part of the overall agreed upon objective. It lets them not only deploy you on tasks that they see fit, but also lets them see where that time is getting used, and can help them to better plan their own business practices, versus if they agree to some overall objective and they don't realize that half the time to get to that objective was something they could have helped in. But if they're paying by the hour, they can kind of see that in the statements to understand where the time went.
100%, 100%. And to build on that point, for some business leaders, that might be an important part of their journey, is for them to spend some time directing the finance function in some fashion. And so, I'm not here to say that. That's why I don't think we should be so dogmatic about everyone should be value billed versus everyone should be hourly billed. I think that's what you and I are saying about this, Charlie, is there's some cases where maybe that entrepreneur, that operator is on a journey where they're in a point in their career in business management where they kind of want to, and it might be good for them to learn how to direct the finance function a bit, which means that they have to be knee deep in telling the accountants, here's what I want you to spend time on this week. Here's what don't want you to spend time on. And I think that's fine. And I think that can be accommodated well with an hourly structure. I think it's important for clients and for providers like us to realize that if the client's in that driver's seat, it's hard for the firm to take on the financial liability of those hours being driven off a cliff kind of thing. So yeah.
And to add to that, this is a great conversation, but I think also to add to that is the fact that sometimes it's not the advisory or value-based kind of fee that they're looking for, right? So I think in some cases, some owners and operators really just want the books closed and or transactions executed or financial statements provided without any type of commentary or advice or any of those things. And so knowing exactly what a client wants and what they actually intend to utilize the service is really crucial in that standpoint. Because I liked what you said, Charlie, too. Like a lot of times they really do just want their financial statements prepared and the journal entries made and posted and reviewed and all that stuff, and that's great. And they don't necessarily want the input of our advice or commentary. So it is really understanding what the needs are and what the wants are, and making sure that everything's in alignment.
Absolutely. No, I agree. So you have another article we can talk about, right, Tammy?
I do. So many people often think about potential tax benefits that they may be eligible for, and some may, try to find some creative ways to obtain them. In an article from NBC New York, they are raising some questions about a potential tax benefit that the Trump organization may be seeking. It has been reported that the final resting place of Ivana Trump will be at the Trump National Golf Club in Bedminster. Could it be that, while unusual, there's a sentimental reason for having her gravesite be located on the property? Or could it be because there are some tax benefits available if the property is designated as a cemetery? The Trump organization has not commented yet whether or not they plan to designate part of the property as a cemetery. However, it has been reported that in a 2014 tax filing, the Trump organization showed an entity called the Trump Family Trust, which planned to maintain and operate a nonprofit cemetery in Bedminster. So a cemetery could provide exemptions for property tax, income tax, sales tax, and the collection of judgment. So while this is still uncertain whether or not this is the path that the Trump organization is taking, people are talking about it. And they're even reporting it as a grave concern and a topic involving death and taxes. So I thought I'd ask the group if this is something for people to get worked up over, or could it even be that if it does take place, that it could impact the business of the golf course? What are your guys' thoughts?
I mean, I could definitely see it impacting the business of the golf course. I mean, anything that has that much publicity around it is going to drive people to that place. As far as the point about whether or not it should be able to be considered, to get a tax benefit out of calling it a cemetery, I think it's a really good question. The way I look at it is basically that it's really an audit of the law around cemetery tax deductions, because to me, it's not a moral question. It's if the law allows him to do that move, and if it's written in such a way that that move works, and we don't like that, not we as us on the podcast, but just the general population doesn't want that kind of event to fall under that law, then it's to me, it's an argument to rework the way that law is written so that it can be, applied properly, and so that things that aren't intended don't become deductible. Because I think that's really what this all boils down to, is it's like, does he get tax exemption from things like property taxes and whatnot by calling it a cemetery? And so, yeah, for me, it's like, in general, if it's legal and if the law allows it, then it's in their best interest to make use of whatever tax programs are available to them, and them being anyone. But it could be the case that something like this draws attention to an issue that was previously unnoticed, and then drives change in the way those laws are written to stop that from happening, which I think is okay too. So yeah, those are my thoughts. What do you think, Ty?
I think Charlie hit it head on, right? I mean, it's either in compliance with the laws and regulations, or it isn't. And, to the extent that it is, I mean, the social commentary of it is that, yeah, of course it's I don't know if funny is the right word, but it's another thing that keeps the family in the news, and the fact, but and then you can say, from a social commentary standpoint, the fact that this family would find a way to take that tragedy or take that unfortunate event and turn it into some kind of financial windfall through government government programs, nonetheless. Do I find that surprising? No, but but I think what Charlie was getting at is that, we may look at this from a social standpoint and say, well, gee, it's not surprising that the Trumps would do this, but in reality, if that loophole's available, anybody with the advisors and the circumstances and the expertise and the logistical capabilities would align themselves with the regulations such that they pay less taxes. That would be common sense, to do such a thing, right? So, yeah, it's interesting. It's interesting to simply speculate. Is the choice of her burial location driven by the potential financial windfalls, or is the burial location a foregone conclusion, and then the financial windfalls were just oh yeah, by the way, I guess since we're doing this, we can take advantage of this particular set of regulations. But those are just social intrigue, items of social intrigue. As a technical business matter, yeah, I mean, I would expect anybody rationally in that situation to take full advantage of their financial opportunities.
Yeah, I think that both what you guys said is 100% true, and especially Charlie, what you said in terms of the fact that if it's within the legal realms and people are now kind of discovering it, because anything honestly that the Trump organization does, especially when it comes to taxes, is going to be on the news and for discussion, right? But that could change to differences in the law to say not only can the Trump organization not do this, but nobody else can do it as well, and have a bigger conversation. But it also could, I think, to counteract it, and it could also reduce the business at the golf course because of the social commentary and the reaction of folks of having that there, or the fact that they're getting benefits from it, or exactly to what you said too, Ty, something that is usually it's an unfortunate event when a death occurs, and it's something that is very people think about it in a very different way. Having it at a golf club, right across, I think they said it was like T1, although I'm not a golfer, so I'm not sure exactly what that means, but it may cause people to say, I don't want to golf where someone has been, respectively buried there and all that kind of stuff. So it is very interesting. I think it is also really interesting that nothing is solidified yet, but it was, on the news and people are talking about it and trying to figure out which way it's going to go. And so we'll see what ends up happening on that, and to see if more, what I'd be more interested about is if that does end up changing tax law on that particular situation. So more to come on that, but I thought it was interesting. So Ty, do you have our next article or discussion?
So if you've watched some of our prior episodes in the last couple of months, you'll seen that I've been on this kick of doing content related to, I've been calling it craft distillery finance, but I realized today as I was putting this together that really a more expansive term is craft spirits, because not every, there's a lot of craft spirits companies out there that aren't full-on distilleries yet, or may never be, but they're still in the craft spirit space. So I'm going to switch my terminology to kind of talking about craft spirits in general rather than craft distilleries per se. And in prior discussions here on this podcast, I've put out some of my thoughts about kind of the different levels of wants and needs that a business in the craft spirits, operators in the craft spirits industries would have from their accounting and finance department. And so I encourage people to go back and take a look at that if that sounds of interest to you. It's just kind of lining out things from the basic to the more advanced things that you might want from your accounting and finance department. But what I thought I would talk about today is kind of moving on from that and just saying, if you are an operator in the craft spirits world, and really a lot of this discussion could apply to many other kinds of small businesses. If you are an operator of a small business and you've kind of defined and you have in mind what your needs are from your finance and accounting department, and you have in mind what your wants are from your finance and accounting department, I think the next thing to consider is, well, how, you need what you need. And so you kind of have to do what you have to do to get those needs done, right? But in terms of the wants that you may have for your finance and accounting department, you have to scope those, you have to scale those to the budget that you have for having finance and accounting help, right? Everyone has to operate in a budget, and your accounting team, your finance team would have to operate within a budget as well. time is money. And so whether you have an in-house team that you're paying salary and they only have a certain amount of time, or you have an outsourced team that you're paying to meet objectives, or an outsourced team that you're paying by the hour, however you're doing that, it comes down to you're going to have to figure out what exactly you want to get from that function, what is practical to get from that function, and what is practical to spend on that function. And so that's the nature of this discussion I wanted to throw out here, is my thoughts on how the size of your business is what really kind of determines your budget here. And then also talk a little bit from there about how you can or cannot scale your finance function. So something, we're sitting here in the summer of 2022, and people may be watching this in the future, but I bet some of these things that I'm going to say are not going to be dramatically different. But as of now, we have a shortage of accountants, and we had a shortage of accountants kind of system wide before the Great Resignation occurred. That's something that has been happening through the latter part of the COVID period. Seems like maybe it's kind of petered out now. I don't hear as much about the Great Resignation this summer now, and a lot of people have fears of recession now. So that may be changed by the time you're watching this video, but I suspect we'll still find that there's overall a shortage of qualified and experienced accountants in the marketplace. And one of the reasons for that is that if you look at some of the statistics for universities that graduate accountants, the university accounting programs across the country have seen dramatic declines in accounting graduates, dramatic declines in people starting accounting degree programs and in graduating with accounting. And there's a lot of speculation as to why that is. One of the possible reasons is that data analysis has become a thing that people get in and study and graduate to go do something in the data analysis world of business. And the people and the skills and the aptitudes that may have traditionally led people to accounting are some of the same things that lead people to data analysis. So there is a theory that the accounting profession is kind of getting split, and we're seeing what we would think of as traditional accountants. We don't have as many traditional accountants because more of those people, more of those young people are going into data analytics. I don't know if that's true or not, but we do know, and we do see in our own little world at TCA, working in our community with small businesses and with our colleagues that are in CPA firms and accountants inside and outside of companies, that not having enough experienced accountants available is still a real thing. So what I recommend in the craft spirits world is that you consider the size of your business and you budget about 3% for of the size of your business for your accounting and finance department. That's how you figure out what is reasonable to be spending. And at some point, your business will hit scale. You'll have efficiencies, economies of scale that mean that it's not always going to be 3% of your size, no matter how big you get. But in the small business world, if you're talking about businesses that are less than 20 million in size, you probably are not really hitting that scale yet. So, I hear a lot of times people say, oh yeah, I guess that 3% makes sense, but I'm a bigger business now because I'm $11 million in revenue. So I think the 3% should be less. And my answer is not yet. You're not really at scale when you're only 11 million in sales. You're not going to have some of the things that allow you to be at scale, like more very complex but effective ERP systems, for example. You may be starting to implement them at that size, but you are going through the growing pains of implementing them at that size. They're not implemented, well understood, and properly used by your organization usually when you're at that size. When I talk about the size of the organization, I just talked about it in the terms of sales, and that would be true. That would be how I think about the size of an operation. If the operation is being funded out of its own operations, if the business is being funded out of its own operating cash flow. But a lot of small businesses, as we know, are not. They're venture backed. They're funded with investor money, and I like to say that means that they basically can punch in at higher than their weight, so to speak, right? They and when that's the case, we have to consider that the size of the business is not really properly understood by their revenue or their sales. It's more properly understood by their burn rate, because they may be operating like a much bigger business than their sales would indicate when they've got investor money to use in scaling the size of their overall business. Another way to say this is that the size of the business is, when you think about it more comprehensively, it's like truly the size. Like, how much equipment do you have? What's your real estate footprint? What's your number of employees? It's all those factors. And I'm just reducing it to a number based on, how are you, either how you're spending money to grow the size of the business, or what you have available to spend if you're funded out of operations or sales. So if you take my 3% recommendation, then you can consider like a few examples, right? If you are a $1 million business, then we're really only talking $30,000 to $40,000 a year for accounting. Now, what I often see, we see it on both sides of this, and you might think, cynically, people might think, oh yeah, you probably are always having to ask for more. You're probably always seeing these businesses that are spending less than the 3%. That's not actually the case. We often see businesses that are spending more than we would recommend. And the tragedy of that is we often see businesses that are spending more than we'd recommend, and they're actually not meeting their objectives. And, and that's a sure sign that the whole thing is just wrong. It's not working properly, right? So you should be able to get the work done here in $30,000 to $40,000. You should be able to get work done that is needed to get done. And that gets down to the brass tacks of it, is that it may be that your goals, it may be that your wants are unreasonable for the size you are, and that you're kind of spinning your wheels, throwing more money than you should at trying to achieve a bunch of things that you're not really going to be able to achieve. And you're not actually getting the things that you should get done at this size of business. Like, if I see a size business like this, they've got a lot of complicated modeling, but they're not closing the books every month. They're spending more than $40,000 a month in their accounting and finance department. The books aren't getting closed. They don't actually know what their income or margins are on a monthly basis, but they've got a lot of complicated modeling going on. That doesn't make sense, right? So I think you have to scale what you want and what you're doing to your size of business, is the overall message I'm driving here. Let's say that you're like a $3 million business. Now you're talking more like $90,000 to $110,000 a year for your accounting and finance function. You might have an in-house person at that level. You might have an in-house person that's dedicated. But what we advocate, of course, is consider an outsourced solution, because you can take that same budget. I mean, if you think about that budget, that could be like one person, or one person with a little bit of extra to spare, right? Or it could be applied to an outsourced firm that can deploy multiple people on a fractional basis, so that, because here, I guess, let me back up. Here's my point with that. That could be one person, but if that's only one person, you can guarantee that one person is not a CFO level person. Are they a qualified accountant controller who can actually get your books done? Hopefully, maybe not. Maybe they are a lower level accountant that you're trying to stretch too far to try to make them be all these things that to provide expertise at levels that they can't provide because they're only one person. Or maybe you're overspending. Maybe you can only get that one person and you're blowing the budget I have here. Maybe you're spending a couple $100,000 and you're trying to ask a CFO at a couple $100,000 to do the clerical accounting work. And so my message on this whole point is you can get back in line with this budget, and you can take that money, and if you spend it in an outsourced solution, an outsourced firm might, if they do what we do, they might be able to bring a CFO to the table for the moments that you need the CFO, which are not going to be that many when you're only a $3 million business. And they're going to be able to bring a qualified controller, accounting manager to make sure your books are done, but still probably not on a full-time basis. And they'll get the rest done with an appropriate level of clerical support. And so for that same budget, you will have the different levels of expertise at the table that you need when you need them. So that is the value at this level of using an outsourced provider rather than trying to do this in-house with a single person. And I would say that you could still feel that value that I'm talking about of doing it outsourced when you're at this level. But I would say for sure, I mean, when you're at this level at 5 million with that kind of budget, you can get some good qualified accounting in-house. But still at this budget, 150 to 170, you're still like one good qualified accountant and maybe some extra part-time help, right? You're not talking about a big department here. So what I would expect at this, I reference in my slide deck here, these level 2 wants. It's kind of at this level here that we would expect that you start addressing the forecasting, the modeling. I mentioned earlier at the $1 million level, I wouldn't expect you're doing a whole lot of modeling. You're just getting the books closed. But at this level, you should have enough budget to get the books closed and actually start having some modeling going on and some financial planning in the business. Okay, well, and let me just kind of, I don't have a slide for it, but I'll throw in there, if you were, even higher, once you get to like the $10 million level, now you really do have budget for expertise, either in-house or through an outsourced solution. And you're full on going to be doing the modeling and the cash flow planning that I've recommended in prior podcasts that you would want to be doing. So overall, what I'm trying to show here with some of these examples and these sizes, just give you a sense of what kind of budget you should be thinking about based on the size of your company and how you should start to scale your expectations based on your size. And so I wanted to close with that piece about scalability. There is an unfortunate reality in our industry that I think a lot of my colleagues would debate with, and this might be a good discussion topic for Tammy and Charlie to throw in as well. But the piece there is, I don't think that at the small business level, accounting actually scales well. We've got all this software and apps and different things out there that make it seem like it's very tech enabled, and so that you can like scale a finance and accounting function. It can just like you can start and get a process in place when you are the $1 million company, and then you can try to use that process when you're a 5 million or a $10 million company. And my overall thought is, I don't actually think you can do that yet. I don't think that the way the way our industry works, that it works well to do that. But before I lay down that challenge, the other thing I wanted to say about scalability here is that the one thing you can do, no matter what your budget is, when you think about scalability, and I think a lot of operators, particularly in the craft spirits world, they're well aware of this operationally. They know that when they engage in one-off projects, it costs them operationally. It's going to cost them more time. It costs them more energy and focus. And there's going to be extra dollars operationally spent to make that one project happen. I think what people forget is that there's accounting and compliance costs that layer onto that. And so my message there is, as operators out there, if you're an operator of a small business, craft spirits or not, this probably resonates with you, even if you're not in the craft spirits world, is that you're well aware of the cost benefit analysis you're making before you do some kind of one-off ad hoc project. Don't forget to consider the accounting compliance costs when you're doing that analysis. And in the craft spirits world, some of the examples that I see are like new markets, like, let's export to this one market just this once. It's a really good deal. We can move a lot of volume. If we go into this one market here, this one time, I think experienced operators know that there's going to be a lot of operational headache to that. And there's going to be some accounting and compliance cost extra associated with that as well. So back to my challenge, the controversial position that I'm taking here is that I don't think small businesses, particularly for sure in craft spirits, but I would say in general, this is true for small businesses, should not attempt to build an accounting process for a $10 million company when they're only a $1 to $5 million business. And I think that's hard to hear because a lot of business gurus talk about building scalable processes that will allow you to kind of travel your growth curve. But the way the accounting industry works, you can't really do that. And my reason for saying that you can't really do that is because the systems involved, if you just look at the software, they don't like gradually, they're not linear. They don't gradually increase in cost and complexity. They're a cliff. It's like you've got the small business grade software. And then when you get to the point that you actually need an enterprise resource planning system, when I'm in ERP here, it's this huge cliff that you have to climb in terms of both cost, complexity, and expertise. And so, and I think it's weird that the accounting industry, the software, the tools that we use, and also I think there's a metaphor because I think it's not only the software, but I think it's actually the people too. Like when you get to that point, the people who have experience working with the larger organizations and the complexity that's involved in it are often just a lot different in their backgrounds than the people that maybe work in the smaller business environments. And so, yeah, I think that's the hard thing for the small business to swallow, is that I often find they're trying to build these mammoth systems when they're a $1 to $5 million company because they want it in place for when they're a bigger company. It's like, you can't do that. It's cost prohibitive. It's not practical. You have to just accept that you're just going to have to blow up whatever system you're using now and use a more complex, costly system later when you get to that point. So that's my thesis, and I'll throw it over to Tammy and Charlie to challenge that or agree with it as they will.
I think that's a really good topic for discussion because I can kind of argue both ways. I think generally I agree. I think you can't build the same processes and then just scale them up and have it work. I think there are clever things that you can do along the way to set yourself up with more scalable processes. So I think there is a discussion to be had about how can a small business make good choices today so that when they get to the point that they're large, they're somewhat more ready than they would have been without those choices. I think there are things in that category, but I think what happens is, A, they get ignored because nobody cares about that until you get to that point. B, a bunch of things don't apply to that. And I'll give you a good example. You talked about CRMs. I mean, a lot of times you start off in one and you build up all your information in one, and then it ends up being a big nightmare transitioning to another one. And you end up not starting over, but spending so much effort that it's almost like you had started over if you had switched. And I think you can't quite get away from some of those challenges. So overall, I agree. I just think I've seen clever accounting decisions or long-term planning done on the systems that they pick to use that will then, help set them up. But in terms of people, that's more all geared at software. In terms of like people and processes, I feel like there's not as much shortcutting because once you start scaling up the orders to some level, just the idea that somebody's checking them, right? That isn't going to scale well unless you have the right people in place and they're putting the right processes up on the front end. And so, and I think a lot of times when you're at that front end stage, it's not a coincidence that you're not always making those choices to set yourself up for the long term, because when you're in that stage, you're focused on survival, right? You're trying to run a business that's growing. And so you're not thinking about, what is my accounting choices going to look like once I grow 5 times in size, and how can I make good choices today that make that go well? You're more like, let's get through the stages we're on. And so, yeah, I think that's kind of how it gets left to the wayside. But and so, yeah, I generally agree with what you're saying. What do you think, Tammy?
Yeah, I also agree. Although I will say, I like the idea of thinking about when you're making the current decisions, like especially if you're just starting to, today, that you're saying, here's going to be the process because it makes sense for my current size. Here's going to be the software that I use because it makes sense for my current size. And then here's the policies and procedures that I'm going to use right now based on my current size, with the thought of like, at what point am I going to start thinking about the next size or the next type of thing? Because I do think that there are some times where, yeah, I mean, you can't, I mean, from a budget standpoint, you can't afford to have the top rated accounting professional, top rated CFO, accounting software, all the stuff day one. You couldn't afford it, and you don't need to, because they'd be twiddling their thumbs in terms of doing that. And plus the software is too complex to actually do that. But so you kind of gradually start doing that, and you start, you have someone who's probably just doing the transactions. Maybe you have a bookkeeper reviewing the work. Maybe you don't even have a CFO, and you don't need one right now, but then you start to kind of gauge, and like in the series that Ty, you've been doing, like level 1, level 2, level 3, I think those are kind of the times where those types of things shift and change, and you are bringing new people to the team, or you're utilizing different advisors or services or things of that nature. But one thing I do really encourage companies to think about is think a lot too, not even just about the processes and the software and the accounting functions, but think about policies and procedures for overall employees and other situations while you're growing. Because I will tell you that what you do when you're a 5-person entity is going to be a lot different than what you're going to be doing when you're a 20-person entity, 100-person entity, in terms of that. Because I always have this famous story, because I was considered the bad guy once it came to my plate to make this decision. But at one point we had a company van that had the, company van, it had the logos all around it. It was insured with our insurance company. It was all the stuff. Well, people were using it to move. And when we were like a smaller, organization, and it was only a handful of people, it didn't necessarily matter in that sense. So like you had, I know you know me, you can take the van for the weekend and you can just move it on your personal time. But as we started getting bigger, there's more people requesting that service. And then you're like, oh, that's on our label, like that people are seeing our vans drive through, and what happens if they get in an accident? What happens with our insurance? And it became a much bigger problem and a bigger discussion once it became too big. And the people who are there from the start to the, at that time where those decisions are made, they don't always understand why policies and things have to be changed when you grow to a certain size. So I always think that, where I do agree with some of the professionals and what Ty mentioned earlier about, I do think you have to think about what it does look like when you scale up. What does it look like when you are a big business? Because most entrepreneurs and business operators are always thinking about, they want to grow. They want to grow their business, and they want to expand. And what does that look like? You can't always invest it and do it on day one, but you should always at least kind of think about and strategize how you're going to handle those types of situations as you grow.
Yeah, thank you both for those thoughts and feedback. I think that's great, and that aligns with my thinking as well. I think thinking ahead about the decisions you're making. I think that's the theme I heard from both Charlie, you, and Tammy here. Thinking about the decision you're making, but like, and as Charlie said, being practical about that, though. Like, you're trying to survive too, so you're not gonna, don't overthink it. But yeah, what choices can you make that could set you up for the future? And I can think of specific examples of that we do sometimes with clients, knowing that they're going to grow into something later, how we choose to, what process we choose to use right now. I won't go into detail now because I don't want to bore everyone. So I'll kick it over to Tammy. No, I'll kick it over to Charlie.
Okay, sounds good. Yeah, I can talk about, I found an article that I thought was kind of interesting in Ars Technica, and it's called "No, BMW is not making heated seats a subscription for US cars." So where this kind of controversy has come is that in South Korea, BMW is going to let owners subscribe to these options, and not just heated seats. There's a couple of other examples, but they're going to generally let them subscribe to these options by paying a monthly fee as opposed to buying them outright, even though most of what we're talking about here is a physical thing that is literally in the car that they actually own. And so, because of that, this topic is kind of getting a lot of rage clicks because it upsets people, especially if it's something that people were used to getting as part of the package deal with a single price before. And so, but this isn't actually the first time that they've tried something like this, according to the articles. In 2019, they were doing the same idea with Apple CarPlay, where you could do it as like an optional extra that you had to subscribe for $80 a year, or you could pay like $300 for 20 years. And the reaction to it was so overwhelmingly negative that they basically faced a bunch of resistance in their biggest market, and they went ahead and relented it and made CarPlay standard across all of their cars. And so now they're kind of trying it again with a different market and with a different feature set. In 2020, they let everybody know that they have a couple of different things that they're looking to do this with. It was going to be cruise control, high beam assist, the heated seats, and a driving assistant plus feature that was going to be adaptive cruise control and lane keeping combined. And so in the article, the author is not a fan of this microtransaction model of car options because he basically doesn't like that like I said, he doesn't like that you're paying for something that used to be part of the package originally. And so, my personal take on it is that I don't think these are a good example of the kind of features that I think make sense to sell on a subscription base. But I do think there are features that do exist that people should pay a monthly subscription for, and to where the cost isn't always immediately evident up front as you're buying that item. I just don't think heated seats are one of them. But I wanted to get your guys' take on, maybe not this exact thing, but are there any features of a car that you think should be priced with this model of unlock, pay a monthly subscription kind of a deal? Or should it just be all like it has been up until now? You buy a car, you own a car, and that's it. What do you guys think?
I agree that heated seats is a strange one. I mean, I guess it's not an essential. So maybe that's how they were making that division, is what's essential versus what's not. Although I think my wife would say that it's essential, but it's like, then are you going to make the windshield wipers a subscription service? I mean, that's crazy. It's I think the GPS and the map, the having that have the latest things, or things that have to do with the onboard content that naturally would have to be updated from time to time. I think that makes sense to have on some kind of subscription service. But yeah, just basic car features where that could go. I guess where they could go in the extreme is that you can't even turn your car on without paying your subscription, right? Like it could turn, your vehicle, it could turn into vehicle as a service, right? I could see that as a future possibility in some regard. Particularly, this reminds me of a conversation our producer Ethan and I were having the other day about he was talking about some of the sci-fi shows that we like, and just that future of self-driving cars. It could be that nobody owns any car, right? You're just hopping into the closest self-driving vehicle that's closest to you, and that's how you get from point A to point B. So that could end up just being a subscription. Like, how do you have the right to jump into one of these cars? Well, because you have the subscription, right? And so I could see vehicles, the use of vehicles in its totality being a subscription service eventually, maybe. But in the short run, while the paradigm is still that you own this piece of equipment, having physical features within the piece of equipment only work if you are subscribed is kind of hokey. It reminds me, what it reminds me of is they started this way with software, where before they actually had software in the cloud, they would take desktop perpetual licenses of software, and then they would start making it so that in order to keep you, they would just make it so you had to have a key, right? So they'd be like, you could only, somehow in the computer, the internal clock would turn off the use of that software after a year if you didn't buy the new key, kind of thing, which was like a really hokey way to take something that you actually had otherwise had physical possession of and limit your use of it unless you paid an ongoing subscription. That's what this kind of reminds me of, is that it's too early. I guess that's where I'm going with all my rambling here. Is it's just too early, right? They'll get there. They'll get to a point where the logistics of delivering transportation is not like, we don't necessarily own our own equipment, or we don't have physical possession of our own equipment all the time. And at that point, when the logistics have got to that point, then subscriptions make sense. But right now, while the logistics are that we literally have physical possession and ownership of our equipment, it just seems hokey.
So I'm very passionate about this conversation. So Charlie, when you were presented this article, I was really excited to talk about it because from a business perspective, I think a lot of businesses know that subscription revenue is a great way to obtaining monthly or annual kind of money or revenue coming in, right? If you buy a car like a BMW and it has all the bells and whistles and the person buys it, typically they buy it for a price. They may finance it, but they buy it for a price, and that's a one-time shop, right? It's a one-time buy. And so to increase the revenue at a BMW side, you can go ahead and do the subscription service. And if you start figuring out or being creative, you could, be like, come up with $100 a month for various different kind of add-on, features that need to be, that people are going to want to have. Because I also agree with your wife, Ty, heated seats are essential. So I think that would be what would happen. But from a user's perspective, or from a consumer perspective, it's extremely frustrating, because unless they're going to reduce the price and say, fine, we're going to sell you a basic car that doesn't have these features, we're going to reduce the cost of it because these were the add-ons that you already paid for and got for free. We'll go ahead and reduce it. And if you want to have all these lovely add-ons, we'll increase the price. You can have options to go ahead and do it, whether it be a subscription or whether it could be done in a different way. But from a consumer's perspective, it just feels like you're taking more money from me from something that is already expensive. What it also reminds me of, which really gets me going, is it's like cable TV. So right now, people who decide to buy cable TV and pay a monthly service fee, it's really expensive, especially in the state of Oregon. If you use a certain provider, it's extremely expensive to have the premium channels. And now all the premium channels are doing these add-on subscriptions of, something plus. And so like only certain, episodes are there. So not only are people paying for their cable bill, but then they're paying a monthly premium on top of that to watch additional shows. And it's just, it becomes overwhelming. And if you start to think about how many times you're going to be like tapped on with these various different subscriptions, and it gets very, very costly to something that is already costly already. So it drives me insane from a consumer aspect. And I think that's why people get really upset by it, because at the end of the day, especially with BMW, I'm just going to go back to that one because it's already an expensive vehicle and it's known as a premium, vehicle for folks. So to add on these like monthly or even annual kind of surcharges or subscription charges, I think it is already kind of frustrating to folks to be like, I'm already paying a lot of money for a car that has all these things. And the reason why I am, because I value the car, the brand, I put some value in that already. But then you're going to start kind of tick-tacking on these little different things for me to use the basic, what I deem as the basic necessities now. And to your point, windshield wipers, Ty, like if they do go to that extreme, it gets crazy. So very passionate about it, as you can probably tell. I think that companies really need to think about what they're going to do, especially if they're moving from an existing purchase option to something that is subscription. What you should do is you should actually figure out a way to show them that they're saving, it's an elective, but that they reduce the original base so that, because some people maybe never use a heated seat and maybe they are like, I would love to pay, $100 less for that car because I never use that. And if I wanted to, yes, Ty raised his hand for those who couldn't see, but then he should get a discount on that, on not using that if he doesn't want to have to use it. But it's one of those things where you need to be able to really show, like, if you are all of a sudden out of thin air creating these subscriptions, that you're showing the value or you reduce the cost of the base so that people really see that they, if they don't want it, they don't have to pay for it.
Yeah, those heated seats, I got to tell you, I don't, there's been many times I get in the car and I'm like, why is my ass on fire? And then I'm like, oh damn, it's these heated seats. What's going on here? Like, I don't get it.
They are enjoyable. On a winter's day, you get warmed up. Now they have cooling seats. Not all cars have them, but they have it's almost like your seat becomes an ice cold little seat. And so
that's probably what I need. Yeah.
Yeah, no, I agree. I mean, good conversation. I'm glad it makes you guys as enraged as it does me. And I'll just put a cap on it. The last thing I was thinking about was just There's really two things that like justify why you would have this pricing model. And it would be if there's an extremely high cost of entry to providing that service. So I think about like Comcast internet, for example, kind of makes sense to me because they got to put and run lines and whatnot. So there needs to be this monthly subscription to justify that huge initial cost that they undergo. Or there needs to be an ongoing cost to the person selling the service that justifies it, right? Like updates, the satellite, that kind of thing. I think if those two things are happening, then it does make sense. But yeah, like in this case, I just can't find an example like that, especially when you're paying the car up front, like you both said. So yeah, I think we've solved that mystery for everyone here. Do you have another article we can talk about, Tammy?
Yes, hopefully this article will be more inspiring than infuriating. So I found an article from Accounting Today that may inspire high school students to pursue a career in the accounting profession. Back in 2017, Massachusetts Society of CPAs created Accounting Careers Exploratory Leadership, also known as ACE. ACE is a program for high school students from the underrepresented backgrounds that want to learn more about business and accounting. And at the end of July this year, they held an ACE leadership event that included panel discussions, guest speakers, field trips, and exercises for the students to participate in. They even held mock interviews, competitions, and awarded gift cards for those who won. One of the students was quoted in saying, "I used to think of accounting as a very boring desk job, but I got to meet actual accountants and talk to a lot of people. I had no idea there were so many other students who were interested in the field." So I may be a little bit biased. For some of you may already know this, but I took accounting as an elective back when I was in high school, as my only other alternative was weightlifting. So, but that's where I became really passionate about the accounting profession. So I of course found this ACE program as a great way to introduce young people to the accounting profession, and I think it could be really successful. But I wondered if you both thought that this was something that other states should try, or if there's other ways to get students excited about the accounting profession.
I think the way to get students excited about accounting is actually through personal finance, because I think one of the things that I've heard from a lot of people who aren't in accounting is that as they go through their general education, they don't feel like they learn anything about personal finance. And while it's not directly the same as accounting, right, learning about how loans work and stuff like that, but I think it's one of the very few times where people's personal lives who aren't accountants kind of delve into the realm of accounting. And I think that if people were able to solve their personal financial problems with a good understanding of accounting concepts, they might realize that, hey, a lot of these business problems that people are getting paid to solve via being an accountant are actually the same kind of problems that I face, you as a person face in your personal life. I think if you can bridge that gap and you can realize that you're already doing so many of the things we're talking about doing, it's just making it in the context of a business instead of yourself, then it makes it not this out pie in the sky, boring thing that you don't do. It makes it part of what you already are doing every day to get through your own life. And, I think would maybe make it more accessible to people who are overwhelmed by it. Other than that, I don't know if that's enough, right? I think there's just people who aren't going to be interested in accounting. There's no way to dress it up to make it interesting to those people, but it doesn't have to be, right? I mean, it takes a certain kind of person, I think, to be in that field, and not everyone's a good fit for it. I think that's okay too. But yeah, that's my way. That's my way of trying to, bring more people into the profession.
Yeah, I think I guess I have a kind of fantastical this article gives me kind of a fantastical thought process, because I love accounting. I love business through the accounting lens, and I think I've had this kind of Bond villain far-fetched fantasy in my head at some point of, what if I could get my hands on, really young people and train them on accounting really early, so that I would create this elite group of accounting ninjas. So by the time they kind of hit their mid-20s, they were already decades ahead. And, and then it just nothing like that ever materializes. But yeah, that's what this article made me think of, was this weird fantasy of creating an elite core of accounting ninjas out of high school kids. So there.
I've got my 9-year-old making some pretty crazy spreadsheets. So I'm trying to build this super army that you dream of.
Yeah, you've got a volunteer, the first,
Yeah,
our first recruit.
absolutely.
Well, I'm not quite sure about the accounting ninjas, but I do think that it is something for folks, because at the end of the day, when people most accountants or most people who kind of go into the accounting field will do so after they have experience with business, or they were working somewhere and they're like, oh, can you start looking at this accounting? You're smart, you're good with computers. Can you do this accounting worksheet, or can you do these entries? And they kind of stumble upon it and they start to really realize how much they like it and that it is fun and exciting. I think what we need to do probably is just make it seem, which is true, it is an exciting profession, right? Get people excited about it and see the reasons why it can be exciting. So maybe through a little bit of Ty's kind of creativeness, we can do like a comic book or somehow do some ad campaigns of really encouraging folks of why accounting and finance is an exciting profession to join.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast for the week. Please tune in again next week for more business updates from an accountant's perspective, and also check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. Thanks for watching.
Bye.